Members, we welcome you all on behalf of Ghatkopar Circle. Today we are actually delighted. We have our own chairman of WIRC, Sri Manish Bhai Gadia sir. Sir, we welcome you. Thank you, sir. Thanks for joining. And Murtuza sir, immediate past secretary of WIRC. Welcome, sir. Our own
thank you.
Past chairman, Priti madam. She is always there with Ghatkopar Circle. Welcome, madam. Today, as you all know, we are starting with the series on accounting standards jointly with WIRC. Today it will be in four different parts. Today we'll be dealing with the first parts. Today we have with us Chintan Patel from Ahmedabad, who will lead the session. But before starting the session, we request Manish Bhai and Murtuza sir to give us their few words and guide us. Thank you, sir. Please, sir. Murtuza sir, Manish Bhai.
Thank you, Bhavin Bhai. And
yes, sir.
Thank you to Murtuza madam as well. Really a pleasure to join or attend this program today at Ghatkopar CP Study Circle. I recognize presence of WIRC Chairman Manish Gadia, past Chairperson Preeti Savla, and my dear friend and council colleague Chintan, who is a learned faculty today. In the 1 or 2 minutes which I would take, I would like to touch upon only one thing. See, the way forward from here, I think technology and the technological tools are very, very important for all of us. And while we are talking about the interesting subject of accounting standards, and which are of course applicable to all entities now, and so while doing the audit, what we can do is we can even use data analytics to a lot of extent, and that is where see, there is some form of analytics which you can do using Excel, but then there are softwares like Idea, where ICI has tied up with, and Idea tool is available. If you give a form registration number for 50,000 plus GST one time, and then you're using a Python or SQL or R for data analytics. Other than that, now we also have the process mining tools like the Celonis and Rockstar, where you can run the tool on your database of the accounting, etc., and it can do the whole end-to-end check of the process, whether the process which is documented or which was intended to be followed is being followed or not. And of course, then there are the likes of the robotic process automation and the object readers.
Yes, sir. Please continue. Please continue, sir. Sorry, sir.
Yeah. Sorry. Yeah. So using robotic process automation, a lot of the purchase bill accounting, the payroll processing, the claim processing, the bank reconciliation, a lot of things are getting automated and people are using it. So I would suggest we should also pick up these tools and technology and adopt them. And it will be helpful not only in audit, but also in implementing or being a consultant to a lot of our clients and helping them in automating the process and bringing about efficiency. So I would say we should also focus and look at the tools and maybe conduct some programs on that. So that's it, and really extremely grateful Bhavin Bhai and the whole team of Ghatkopar CP Study Circle and Preeti for inviting me today. Thank you very much. Bhavin Bhai, over to you. Thank you.
Thank you. Thank you, sir. Thank you, sir. Now I request Manish Bhai to please say a few words. Manish Bhai, please.
Before me, I think Preeti Savla madam is here. She is past chairperson. I request, and she is currently heading study circle committee also. I request
Preeti madam.
Chairman WIRC, CA Manish Gadia, my co-chairman, CA Murtuza Kachwara, Study Circle Committee, and Chintan Patel, faculty, Bhavin Bhai, Mamta, Yogesh, entire team of Ghatkopar Study Circle, galaxy of past conveners, seniors, my friends. It's a really nice initiative which the study circle has taken for organizing a series of sessions on accounting standards. It will be really helpful to everyone. And I'm really complimenting and congratulating my entire team. I can see Charitable, immediate convener. In this pandemic also, they are doing wonderful work by serving all the members on the online platform. And Vanishwa is there from WRC platform sharing various initiatives of WRC. So
Priti madam, your voice. Hello. Priti madam, your voice is not there. Voice. Your voice, ma'am. Your voice is not there, Priti madam. Mamta, can you check? Priti madam, your voice is not there.
I have completed. I
Yeah.
have already.
Okay. Fine. Thank you, Priti madam. Thanks a lot for your words. Nice words. Now I request Manish Bhai. Manish sir, please have some few words for our association and session. Thank you, sir.
Thank you, Bhavin Bhai, first of all, for inviting me. And it's like Ghatkopar is always like my own study circle. Since so many years, I'm visiting this study circle every year. And
Yes.
the warmth and the knowledge, what I'm gaining from here is really, really great. So,
Yes.
CA Murtuza Kachwala, CA Preeti Savla, past chairperson, my council colleague Chintan Patel, chairman of India's and Accounting Standard Committee, WIRC. So I should say that first of all my regional council colleagues this year are working really, really very hard. Preeti Madam has done a fantastic program on networking recently. And for SMP committee, she is doing fantastic job. For study circle committee also, the new guideline has come of that AOP formation and all that. She's working hard on the same. As far as Murtuza Bhai is concerned, yes, structure, he is coming out with a CFO forum and a new initiative also he is taking as a chairman of members in industry committee as CEO Speak, a journey from articleship to CEO. It will be a chat show where a member can be motivated that the CFO is not the highest position. You can become CEO or you can become a owner of a business or of industry. That's what is going to start. Chintan Bhai is really working very hard as far as the accounting standard is concerned. One book is already ready under his leadership, which we are going to launch soon. And apart from that, he has given various suggestions on accounting standard, auditing standard, and in AS. So till now, he has already submitted in the last 3 months 5 representation to India's committee, ASB. So really great work, Chintan Bhai. Apart from that, this year WIRC has taken various new initiatives. One is having a WOW series every Wednesday on second Wednesday of the month. We are having a women faculty and we are getting good response for the same. We have also started Tech Age series. On every third Thursday, we are discussing about technology, and now technology has become a buzzword and it is the future of the profession. As Murtuza Bhai already said that you should have some program on technology. It's my earnest request to do that. WIRC has also launched a long duration technology course on data analytics with the use of Python. and SQL. And the response, I will tell you, is so fantastic that when we launch this program, within 3 days we have to close the registration.
Okay.
First batch started yesterday only. Second batch also we have launched, which is going to start on 25th June. That is also full. So really, it's a great response we are getting. We have also started with a mentorship program where a senior member will guide to a junior member. So junior member can join as a trainee with a mentor, maybe for 6 months, 3 months, or he may join only on need base and take his consultancy. We have also started a Telegram channel. So I request all the members to be connected with WIRC on a social media. We are also having our own YouTube channel where we are also uploading short videos of recent updates. Apart from that, what program we are having, that also we are uploading on the same. So subscribe to that channel to be updated. Lastly, I want to tell one thing is that we have also started a new project called TEL, Train, Earn and Learn. This is a unique project where we have structured a 36-hour of learning which will be given to undergraduate students who are not pursuing CA.
Okay.
After going through this course, we will give a certificate of participation to them, and we will give the opportunity to them to interact with to undergo a training with a CA firm for 1 year. So it will be a win-win situation for a student because he will get some hands-on training. It will be a situation for college also because their students are getting skill enhancement. And as far as chartered accountant are concerned, we are also getting some trainee who is enthusiastic, who want to learn something and will be available as a trainee for 1 year to us. So first of this kind of batch, for them, we are doing campus interview. And that campus will be, we are launching on 20th June. So those CA firms who are interested of hiring such kind of undergraduate student can write to us at wirc@ici.in for the same. So once again, thank you very much, Bhavin Bhai, for inviting me here, and thank you. Over to you.
Yes. Thank you. Thanks a lot, sir, for your kind warning and describing the activities of WIRC, and as well as what you're suggesting, what you're doing for the undergraduates also is very good, markable efforts from your side. Thank you very much. Thanks, Murdula sir. Thanks, Manish Bhai. Thanks, Pratibhen, for giving your time and coming to our study circle. Thank you. Thanks a lot, sir. Your presence has given a good results to us. Thank you, sir. Now I request Mamta Ben to please introduce today's speaker. Thank you. Mamta, your voice is not there. Mamta, your voice is not there. Yeah, it is unmuted from here. No, can't hear you. Sorry, I think some problem at her side. So I will take this opportunity to introduce today's speaker, CA Chintan Patel. He is a FCA, CPA USA, CS certified IFRS, ICAI, DISA, CISA USA. He is a regional council member of WIRC of ICI for the year 2019-2021. He is a past chairman of Ahmedabad branch of WRC of ICI for the year 2017-2018. Ahmedabad branch has received first time all 4 best awards of branch and student at both national and regional level under his chairmanship. He is the co-author of book on Quick and Guide to Ind AS and published by Taxman. He is contributor to Android application accounting auditing resources. He is a practicing chartered accountant since last 18 years. He is a mentor of Knowledge Update channel on YouTube. He is a regular speaker and trainer at various forums with more than 300 presentations at various seminars in India, Dubai, Muscat, Salah, etc. His written articles published in ICI journals, newsletters, etc. He is the chairman of Ind AS Committee of WRC of ICI. His experience on Ind AS, International Gap Conversation, Companies Act 2013, Risk Advisory, GST, and all other subjects. So today we have a really good speaker, and I'm amazed to see all these degrees with you, sir. Chintan, we are really great that we have with us you. Now I request you to please start your session. Participant, please listen to him. Participant, one more request. Participant, if you have any query during this session, you can write the same on the chat box. Chintan will take the same during this session. Thank you. Now over to you, Chintan. Thank you.
Thank you so much, Bhavin, for introduction and Mamta for arranging the beautiful session. It's always a pleasure to listen to the chairman WRC in the study circle. So, and when Manish Bhai is there, and when he talks about this kind of the activity which WRC is doing, see, I was actually surprised to see Manish Bhai here because 10 minutes back he was at some other session, 20 minutes back he was at some other session. So when the large DTRC was going on and he was able to spend time for Ghatkopar CP circle, that just shows the love and affection for Ghatkopar CP. So thank you so much, Manish Bhai.
Chintan Bhai, the love and affection what I have towards Ghatkopar and the love whatever Ghatkopar study circle has given me in the past and always. So I cannot say no to him, especially to Bhavin Bhai. I have so much old relationship with him, so it's really, yeah. Sorry, Chintan Bhai.
And I think Murtuza Bhai, when Murtuza was talking about the IT, he is the guy who's expert on the technology. And there's something on technology. The first name is remember is Murtuza Bhai. So Bhavin Bhai, if you find an opportunity, you can just always take the time of Murtuza Bhai, and he will be the best speaker on this topic. And
sure.
And Manish Bhai was talking about the WRC activity. I was thinking the 2 words are gone because the number of activities which are done in WRC leadership are such that we have to create a separate session to see that at least we are aware about the activities which are done by WRC. So under the dynamic leadership of Manish Bhai, we all are doing fantastic job. It is not something that I'm praising him, but I've seen him working day and night. There are so many times where we have talk on 10:30 night, 7 o'clock in the morning about discussion WRC. So that just shows the dedication of the team WRC. And before I talk upon the actual topic of the 2 sessions, first let me thank each one of you, and special thanks to Bhavin Bhai. He has been so much trying to ensure that every arrangement is done perfectly. He called me at 3:30, 4:30 just to ensure that audio, video, arrangement, everything is good. So dedication of Bhavin Bhai and the other team is fantastic. Sir, thank you.
Thank you.
Every member of this circle gets the fantastic arrangement. You are trying your best. Now coming to the topic, let me share my screen and then I will focus directly on the topic, which is the main objective here. Is my screen visible, Bhavin Bhai?
Yes, sir. Perfectly.
Okay, fine.
Sir, can you make it enlarged? Small zoom, some possible है? थोड़ा zoom करने का.
Enlarge, right? Is it not enlarge?
Yeah, enlarge possible है? ठीक है, continue sir. No issue. Continue.
No, I think it was enlarged. Is it enlarged now or not?
Yeah, no, okay, visible. Continue sir. No issue.
No, visible is fine, but is it enlarged? Are you able to see the complete screen?
Yeah. We are able to see it. Sure.
Okay. So the topic which has been selected here is on accounting standards for non-company entities. the most important thing, and if you look at the heading itself, it is focusing on non-company entities. That is the focus and that is the main objective of this particular series. Wherever the standards are there, is it on accounting standards or auditing standard, the first thing in the mind of everyone is that the accounting standards are relevant if you are having a company. But with this objective only in mind, we have taken initiative that let us have a series of sessions across region to create awareness that accounting standards are also applicable to non-company entities. Because even though there are a series of accounting standards which have been done for so many years, how there's nothing nowhere mentioned about the applicability or issues for non-company entities. So it is perceived, it is always believed that if you are doing audit of a non-company, it is not compulsory, it is not mandatory, it is not something which is required, it is not the objective of auditor to verify and check. So that's why as a WRC what we have done, that this time we have taken an initiative that let's have a series of program to be done only with the topic accounting standard for non-company entities, and that is to be done at every study circle, at every branch of region, with the hope that every member, whenever they finalize the audit of any company which is any entity which is not a company, they have to be aware about the applicability for these things. Now let us, with this objective, let us look at that what we have today stored in this index. We are going to focus first on ICAI announcement. ICAI has issued announcement on 31st March 2021, and where they have revised the criteria of classifications of the entities. So we are going to focus on what is the revised criteria. Then we are going to take care about the applicability of accounting standards, to which entities it is applicable, because the criteria is completely changed. So we'll focus on that things. Then there are certain exemptions or relaxation which are provided from accounting standards for certain entities. So which are the exemptions, relaxations, particularly AS15 employee benefits, AS22 income taxes. So we'll focus on that exemptions, relaxations. Few frequently asked questions which we have seen and observed over the period from the members, that is we're going to talk about. And at the end, as the time permits, we're going to talk about the commonly observed errors in accounting standards. So what I have done that from the publication of Financial Reporting Review Board, that is the publication of commonly observed errors in accounting standards. From that, I have selected certain errors which I feel that let us look at it too. And these are only just a few samples which have been selected from the whole publications, just to we get awareness that this is something which is available, and let us understand from the errors which has been compiled by ICAI. Now, before I focus on the ICAI announcement, which is in this fashion, I think the first thing which we have to be very clear that the government's expectations on the chartered accountant is very high. They always believe that when the auditor has signed any financial statements, but the auditor has made signature, that means what? The financial statements are true and fair. So the expectation of the government was definitely very high, and it has really become on highest point when Prime Minister Narendra Modi has referred a statement that the signature of CA is more important than the signature of Prime Minister. I think from the head of the country, from the mouth of the head of the country, when somebody says that CA signature is more important than the signature of Prime Minister, I think that gives a lot of credit to us. Along with the credit, the most important, the responsibilities also increase on our shoulder. So that's why we need to be really very much sure that we have to be very careful when we are doing any attestation goals, and during attestations we have to ensure that the compliance of the accounting standards, compliance of a standard of auditing, compliance of any laws and regulations for which we have been doing audit, they are on the top priorities. We have seen in last few months that from the Finance Act 2021, one of the most important change which has really affected every one of us is on the GST audit. Self-certification is now made instead of the certification or attestation by a chartered accountant or cost accountant. I think that has really changed the demand of CA as far as the GST audit is concerned. Another thing was that as far as tax audit was concerned, the limit was increased to 10 crore rupees. So when we look at all these kind of things, that gives a feeling that the quality of reporting, quality of audit, what the government expects from us, somewhere there is some issues. So we need to really focus on everybody has to improve, including me, because everyone in every firm there are a lot of scope of improvement. And I think wherever time permits, we need to ensure that we need to really ensure the compliance of all these standards of auditing. We need to increase the level of compliance in our firm, whatever stage we are today. So with that particular motive, this particular session has been there. Now let us focus on the ICAI announcement that is dated 31st March 2021. Now that announcement says first focus is that it is applicable to the accounting standard for non-company entities. Here when we look at non-company entities, before this particular announcement, the earlier one was addressing that it is applicable to non-corporate entities. So the word non-corporate has been modified to non-company entities. Classification of non-company entities are into the following 4 criteria. So what is done? If you're auditing an entity which is not a company, then which accounting standard do we apply? Earlier, we have classified all non-corporate into 3 levels: level 1, level 2, level 3. Now, what they have done, instead of having 3 levels, they have classified into 4 levels. So, earlier classification of 3 levels, which was applicable in earlier case, now this has been modified to have 4 levels, where level 1 is a large enterprise, and then MSME. So MSME is a word which has been very well known across the industry, because Udyam Aadhar registration, where it says that MSME has to get it registered. We also look at the notes in the notes on accounts, which focus on the things that MSME, macro small medium enterprise, if the payment is outstanding, then it's to disclose. So MSME is a coined word which is very easily understood by everyone. So that's why what ICAI is done, that they have changed the levels as far as MSME is concerned. So earlier it was only large, small and medium. Now the large, small and medium with 3 levels are now changed to 4 levels. That is on level 1, large size entities. Level 2 is on medium size. Level 3 is on small, and then level 4 is a micro size entities. So 2, 3, 4 is a micro, small, medium entities, MSME, and level 1 is a large size entities. Now that means what is changed? Change is that the accounting standard applicability is changed? No. See, the levels are modified. Earlier also the accounting standards are mandatory for entities. So even if you are non-corporate entities, earlier it was compulsory, it was not optional. Now what is changed is not the requirement of AS for non-company. It is only about classification of the entities in the level 1, 2, 3, 4. Here there may be a question that what is the objective of classification of a non-company entities in levels? I think objective is very clear, just to ensure that if any entity is a large one, then they are in a better position, and then there's a more requirement to give a transparency and disclosures. If the level is a micro enterprise, then for micro entities, asking them to have more disclosures may not be a right one. That's why there has to be a separate disclosure requirements if it is a non-company. However, if it is a company, then there is no level 1. So I think the first thing is that the objective of classification is to have a separate applicability standards based on the size of entity. But if it is a company, that means all accounting standards are applicable irrespective of the size. So if it is a non-company having turnover of just 5 crore rupees, it is a micro size entities. But if it is a company having turnover of just 50 lakhs rupees, still all AS has to be applied with this. So I think that is very clear that when we focus on level 1, 2, 3, 4, we are just focusing on the non-company entities. As far as company is concerned, there is no exemption, there is no restrictions, there is no labels for companies. Every account has to come they 4 levels, and with the objective that the smaller should get more restrictions and larger should be compliant with all accounting standards. During the presentation, if you have any questions, please feel free to put in chat box. Sometimes what happens when you ask questions, then obviously it also encourages me to respond. Also, I learn from your questions, and that can be helpful to me in the future. So please feel free to put your questions in chat box, and I will be checking chat box at regular intervals. Based on the time availability, I will deal with the questions during the interval or afterwards. But let's try to have more interactions, and that is the main objective. Wherever I feel that interaction will go a little longer, I will stop and then we'll move forward. So the focus is to just to have a little interaction, because there is a virtual. I think virtual has a lot of advantages that anybody from sitting across the region can be part of these particular things. But the negative thing is that we are losing interaction. Negative things that I'm losing eye contact. Negative things that I'm not sure that how many listening to. So yes, there are positives that that's why what I'm saying that put your queries in chat box. I will refer to queries as far as the time is constrained. I will look into the queries and then I will respond to you. But let us have an interactive as much as possible. So with this objective, let us first understand that this announcement, how these entities are being classified into the 4 levels. And these 4 levels will provide you information about planning your activities. The clients which you are handling for audit, whether these clients are which clients are for large, which clients are small, medium, that can be you plan. And as per the planning, you can really focus doing these things. Next point is that the applicability. The accounting standards for non-company entities, the announcement which is issued by IC on 31st March 2021. That is effective from 1st April 2020. So the period, financial year 2020-21, that is the first year to which this notification is applicable. Generally, what happens that once the notification is issued, it is generally effective afterwards. This is effective from 2021. Why? Because this provides a relaxation. Because compared to the earlier levels, this has a more restrictions. That's why the entities may have a more relaxation, and that's why this is applicable from the financial year 2020-21. So when you finalize your the accounts of or do audit of the non-company entities, you have to ensure that these levels 1, 2, 3, 4 are going to be applicable. Now let us look at what do you mean by level 1. Now level 1 is that non-company entities which fall in any one or more of the following categories at the end of relevant accounting periods. First is a listed or in the process of listing on any stock exchange either in India or outside India. Generally for listing, it is always a company. But I think for the sake of keeping that particular things, it is in kept here. So in certain cases, maybe out of India, or in certain situations, possibly in future, it may not be company but still listed. So if that is being allowed, and if somebody is being listed, then they are always a level 1. Then comes the second layer, which talks about the banks, including cooperative banks, financial institutions, or banks carrying, basically banks carrying on insurance business. So when I do a first thing here, you have to be sure that here the word is listed, and it uses the word securities. So when the word securities is used, that means it includes the shares, debentures, all kind of things. It is not only shares. Even if somebody has certain kind of securities which are listed, then also it's covered. Plus any stock exchange. Any stock exchange is not doesn't mean only the Bombay Stock Exchange. NSE, it can be multi-commodity exchange. It can be like a small MSME exchange. So it is not focusing on only a large exchange. Any kind of stock exchange, if somebody is listed or listed, it is covered here. Then comes banks. Banks including cooperative banks. I think that is what we will see, that all banks, including cooperative banks, are covered here. Financial institutions or insurance business. So banks, insurance, they both are covered here. So first and two are definitely very large, where the focus is a listed or in the listing, or it is a bank, insurance, or financial institutions. Now coming to the third, fourth, fifth. Third, fourth, and fifth. These three are the common for 2, 3, and 4 level. So in level 1, it says it is based on turnover. It says where the activities are engaged in commercial, industrial, or business whose turnover excluding other income. So when the turnover means it's the revenue, it should not include other income. Whose turnover exceeds rupees 250 crore in the immediately preceding year. So if you are focusing on the audit for financial year 2020-21, right? So we all are right now focusing on 2021. In 2021, due to COVID, there may be a lot of issues where the turnover may have been reduced. However, for the purpose of applicability of accounting standards, we need to refer 1920. So turnover of 2019-20 will be a determining factor for us to understand whether I am a level 1, 2, or level 3. So just look at the 2019-20 turnover, and if the turnover is exceeding rupees 250 crore rupees, in that case, it is a level 1 entities. Then comes the third point, which is on borrowings. It says all entities engaged in a commercial, industrial, or business entities having borrowings, including public deposits in excess of rupees 50 crore at any time during the immediately preceding year. So again, the borrowing is also going back to the last year, not 2021. Just go back to 1920. In 1920, if at any time, if the borrowing including public deposit is in excess of 50 crore, then this is covered in level 1. And then last is very common, where any holding or subsidiary of anyone above, they are always covered here in that particular categories where there the company belongs, right? So this means that turnover 250 crore more, borrowing 50 crore more, and bank, financial institution, insurance, and so about listing. Now let us look at the next point, is a level 2. At the level 2, basically we are focusing on again the turnover, borrowing, and basically, so here turnover was earlier 250 crore, now it is 250 to 250 crore, right? And the borrowing earlier was 50 crore, now it is 10 to 50 crore rupees. Holding and subsidiary of above are covered. Next point is on level 3, where again turnover is what, 10 crore to 50 crore, right? Just a minute, 10 crore to 50 crore turnover, and borrowing is what, 2 crore to 10 crore. And as far as we talk about level 4, so level 4 is what, any entities which are not falling in any above. That means what, turnover is less than 10 crore and borrowing is less than 2 crore. So these all are, please ensure that these are any one or more, right? That means level 4 means what, they are having a turnover less than 10 crore and borrowing less than 2 crore. Now if you talk about this situation, that means you need to look at any one or more to understand the level. Now if an entity is falling in level 1 and subsidiary of that, which is partnership firm, is falling level 3, then that particular subsidiary will also be falling part of level 1 because of the last sentence, holding a subsidiary of any of the above. So once one of the entity is falling in the higher level, all other entities whether a holding or subsidiary will also be part of the higher level. So that is our idea. Now let's look at the overall summary. It's just not a technical summary, but it's just giving you over pictures. It said the listed or in the process of listing, right? Then it focused that it is a banking or financial institutions. Then it is all a level 1. There is no option here in this case. If a turnover is 250 crore, more than 250 crore rupees, level 2 50 to 250 crore, level 3 is 10 to 50 crore, and borrowing is basically more than 50, 10 to 50 to 10 crore rupees, then level 1 to 3. And level 4 is anybody which is not covered in level 1, 2, and 3. Now the question comes to mind, then what is the main objective of doing this? Ultimately, why we are doing this? So yes, as I mentioned earlier, that this will just ensure that you all are understanding that to which account standards you would apply. So if it is a level 1, means having a turnover of 250 crore or more, or borrowing of 50 crore or more, then all accounting standards are applicable. There is no exemption as far as level 1 is concerned. If the level 2, 3, or 4, then based on the level, the applicability of accounting standards will differ. That will discuss which A's are applicable to this level 2, level 3, 4, and then which are not applicable, and where there is an exemption or relaxation. Now, do you have any questions so far, or shall I move forward? I think, let me see. Options. Bhavin, there is a chat box. How can I see chat box?
Chat box is there, sir.
Yeah, fine. Yes,
fine.
I will look into that, right? Okay, Judge B has asked question whether entities whose securities are listed is covered under non-company. As I understand, normally, absolutely, Judge B, I also mentioned the same thing, that in general, if it is a company, then obviously they are only listed. But however, the focus was that just to cover any permutation combination which can happen, because it's focusing on listed or in the possible listing, because it's in the possible listing, right? Second thing, it again says that securities. So even if the debentures are issued which are listed, then what? Also, it talks about within India or outside India. So there are many permutation combinations which are involved here. So with this objective only, they just made sure that any securities which are listed or in the possible listing on any stock exchange in India or outside India, just to cover any possibility which can happen. I hope that's clear, Judge Bhai. Thank you so much for raising this query, because that makes it very clear for all of us. Fine. So no further questions. So I will move forward to my next topic. That is what is one of the most important billion-dollar questions for all of us. Is the auditor Bipin Mundaji? Bipin ji is there. Okay, Bipin ji is very good, dear friend, and he has been in touch with me. Fine. Bipin ji, if the company is partner, okay, I'm not Bipin ji, if the company is partner means, so basically we need to look at entity. If it's a partnership firm, Bipin ji, if the partnership firm is there, then we need to look at the partnership firm as an entity, not a company, and then we need to look at the turnover and borrowing costs. So even if the company is a partner, but to a partnership firm, accounts applicability is governed by these particular notifications. Good to see you, Bipin bhai. Thank you so much for being here. Let's be in touch and have interaction and move further. Now coming to the million-dollar question here, which is a question for each one of us to really ponder and respond. Is tax auditor? I'm also looking for the response of this question in chat box, right? So I request each one of you to provide their comments, what they believe on this question. Is tax auditor required to comply with accounting standards while carrying out tax audit under section 44 AB of non-company entities? Now, this is a question which I'm asking to all of you. Why? Because this is applicable to each one of us, and I have seen in various CF firms, including my firm, where when I interact the staff, they feel that it is not applicable or applicable. There are a lot of diverse opinions are coming here. So this is a case across India. So what is your view? Jatin ji says no. If you are tax auditor, there is no need to worry about account standards. Then you are okay. Bipin ji says yes. Also ICDS. Bipin bhai is going one step further. He said not only AS, but we also refer to ICDS, that is income competition disclosure standards. Bhavin ji, I will take your questions little later. I'm just focusing on this. Then I will come back to questions. Right. Sudhir Shinoy, he is saying yes. GSC, I think I don't know what is GSC means, but yes, GSC, yes. Okay. Kishore Kumar Maheshwari ji. Everybody please give reply to everyone. We all are part of one group. It's always pleasure to Mehul Shet, yes. Bhavin ji says ASI applicable to tax audit. Fantastic, Bhavin bhai. Bhavin bhai, I've seen you have been very active from the beginning itself. Thank you so much for being active. Kiran Anil Patel, AS by ICDS. So Kiran bhai also mentioned the same thing both. Trupti mentions yes. Mahindra Gala, AS applicable. Fine. Any other response? Anybody who feels not applicable?
किसने सिद्धि ने बोला आपको सर? मैं सिद्धि से बात करता हूँ. मैं बात करता हूँ. हाँ.
Okay, fine. PBS, yes.
हाँ, मैं बोलता हूँ सिद्धि को. हाँ. वो आपको रिवर्ट करेंगे.
Yes, applicable. Fine. So getting a lot of response here. Fine. Kishore Kumar Maheshwari, yes, applicable to all of all. Please mute your mics. Okay, fine. Done. I think that's it. Thank you so much, all of you, for being so much active. And this also gives me a lot of positive feeling that yes, you are there. Because in virtual platform, what happens there? I don't know how many are there. I can see there are 200 people. However, are they listening to you? So this just gives me indication. Yes, you all are listening. But the most important thing, beyond the understanding, the most important thing is that we all should be very much clear about the applicability of accounting standards. Now I'm coming back to my slide, and let us discuss about the reality. The answer here is that yes, and for that we need to refer to para 10.9 of guidance note of tax audit, which is issued under section 44AB by ICI. So ICI has issued a guidance note of tax audit which has been issued for so many years back. It is not the new one. The para 10.9 of the guidance note issued by ICI says that accounting standard also apply in respect of financial statements audited under section 44AB of Income Tax Act 1961. Accordingly, members should examine compliance with the mandatory accounting standards. Somebody can just look. Okay, thank you. So, AS also apply in respect of financial statements audited under section 44AB of Income Tax Act 1961. Accordingly, members should examine compliance with the mandatory accounting standards when conducting such audit. So the one very important thing to all of us, that how much importance we are giving to the accounting standards. I think this is something when we provide attestations, it is compulsory. If it is company, it is already covered by the company auditor, so we are risk assured about the company, because if a company, it is already covered. As far as the non-company is concerned, then we need to see that the accounting standards are being compliant with it. If they are not compliant with it, then what will happen that it is maybe a cause of concern as an auditor when it's certified as a true and correct, true and fair. So let us look at that. Next point is, before I look at this here, let me look at some of the questions. If there's some questions are there. Okay, fine. There's one question earlier by Bhavin bhai. Yeah, a foreign company incorporated a private limited company in India as a subsidiary of foreign company. So how the exemption of account standards are applicable to these private limited company? Sir, if there is a company in India, right, then it is always a company. It's an Indian company. It may be a subsidiary of a foreign company, but yes, it is an Indian company, so Indian company has to comply with all accounting standards. I hope Bhavin bhai, I am clear, and if something is pending, please let me know. Okay, PBS, sir, आपका नाम रखो ना. Then we can understand who is asking and we can interact. Even section 145 says assessing officer is not satisfied about the correctness or the completeness of the accounts of the assessee. So completeness would be questionable if it's not as per IC correct. Fantastic, sir. Sir, अपना नाम कीजिए sir, PBS sir. अपना नाम लिखिए, type कीजिए please. So what is mentioning that section 145 says that Okay, Balasubramanian ji, fantastic, sir. Very good. You have really touched upon the point which I am going to cover right now. If you look at what is responsibility as a tax auditor, the responsibility as a tax auditor is two. One is a reporting on accounts, and two is the reporting on information furnished in Form 3CD. So there are two responsibility as an auditor. One is a reporting on accounts, and second is reporting on the information furnished in Form 3CD. So we have been giving more focus on the Form 3CD and looking at the reporting under Form 3CD. However, another most important part of the duty of auditor is to also look at reporting on account. And whenever we provide our comments of reporting on accounts, these accounts are required to be complied with.
आपको स्क्रीन वाली कर उनके उनके
So yeah, Sudhir ji, you are also feeling that little disturbance. I understand that, but fine. There are 200 people. Somebody by mistakenly unmute and then they are not aware. So fine, we'll try to really see that it doesn't happen. Bhavin is doing his best to see that this should happen. Let us go ahead. So I think the one very clear message, I'm spending more time on this particular topic because I have seen across the region, across the country, that it is a perceived belief in the CA firm that if you are doing tax audit, accounting standards are not applicable. However, that is something which is incorrect. Now let us understand which are the other issues about these things. Coming to the next part, where there's a question to all of you: is accounting standards applicable in case of charitable or religious organizations? Is accounting standards applicable? I'm asking to all of you. Please respond. Is accounting standards applicable in case of charitable or religious organizations? Yugira ji, yes. Sudhir Shinoy ji, yes. Poladia ji, yes. Bipin Munda ji, no. Jayesh bhai, yes. Shivaji, yes. Mahendra bhai, yes. Mehul bhai. I think you all are so much eager to come back with everything. I think that's a hats off to all of you. Kuch bhi aaya, karna hai. Means actually, all chartered accountants are now. Anything comes, karna hai. Anything comes, yes, we will do it. But the most important thing, if it is a charitable organization or religious organizations, accounting standards are not applicable. If you look at the level 1, 2, 3 entities, it says that if it is for commercial activities, then only. If there is no commercial activities, in that case, there is no need to comply with accounting standards. It is governed by the trust and other acts. So if there is no commercial activities, then accounting standards are not applicable, which was again clarified by ICI in the guidance note. And now let us, yes, Vipin ji, you are right. Okay. So let us now look at the next important point. Why? What is another thing which is asking us to comply with this requirement? That is what we need to be aware. One of the very, very important initiatives of ICI to have a taxation audit quality review board. Before I talk about taxation audit quality review board, one thing which I would like to address, which was earlier being talked in the chat box: income competition disclosure standards. Now, if you look at, there are 3 standards, or there are more than 3 standards also possibly. So there are 3 different types of things. One is Ind AS, Indian Accounting Standards, Ind AS. Then there's Accounting Standard AS. Now, as there are 2 standards for accounting, government believes that there is need to have 1 standard for competition. So, income competition disclosure standards. Now, income competition disclosure standards are, the name itself suggests that these standards are for computation of income for income tax return, for income tax payment. So these are not with respect to the accounts which are prepared. As far as Form 3CD reporting is concerned, we are supposed to also look at ICDS reporting. But ICDS are part of my reporting in Form 3CD, because ICDS are primarily governing for the computation of income. It is not talking about the accounting standards. So whenever there is a questions as far as the maintenance of account is concerned, it is always governed by either AS or Ind AS. Now, with this brief word, let us go back and come to our topic of this particular PPT, that is on Taxation Audit Quality Review Board. This is an initiative of ICI and it was established a year back. And as for this particular board, Taxation Audit Quality Review Board, the focus and objective of this is to cover taxation audit. Taxation audit means what? Tax audit and GST audit. So GST audit now, I think, I don't know that how far it won't be part of, but yes, for the last year, yes, GST audit was always there. Now the focus was there just to initiate and install the confidence building for the government that we have a mechanism internally in ICI just to ensure that the quality of the audit reports are at par. And for that, we have an internal mechanism to ensure that this has been done. That this particular board has been established, which has a power to review the tax audit reports and GST reports, which are filed and attested by the the CA members. So let us look at the scope. The taxation audit quality report scope has either a tax audit or a GST audit. The selection, it is a suo motu. So either they can suo motu select certain audits for the purpose of the quality review, or it can be by reference by regulatory. Government, GST payment, or anybody can put a reference and they can provide a reference for selection of the audit for review. Or third thing is that in case of any serious irregularities highlighted by the media in certain news report about the quality of certain things, then it can be selected for the purpose of the review. Once these tax audit reports or GST reports are selected for the review, then after review, if the discrepancies are noticed, and the discrepancies can be material or it can be immaterial. If the discrepancies are material discrepancies, then the matter may be referred to the disciplinary committee ICI for taking a further action. If the discrepancies which are being noticed are immaterial, then they are being given to the they are brought to the attention of the auditor so that auditor can take care in the futures. I think that is what the mechanism in which the tax audit quality review board is going to function. As far as the scope of coverage which is mentioned for the board, to start with, they are focusing on little large size, where it is a listed or in the process of listing companies, banking, financial institutions, or insurance, turnover which is more than 100 crore in financial years, holding a subsidiary of any of the above, and other categories which may feel are required. So you can get more information about these particular things maybe in ICI, and where you will identify that the scope. But however, my focus is that my objective to all of you is that please ensure that the accounting standards are the part and parcel of your tax audit. Because when I look at this applicability, I think we all have seen here that if the turnover is more than 10 crore, the turnover is more than 10 crore, then it is always either level 3, level 2, or level 1. So whenever we are doing tax audit, whether turnover is more than 10 crore, you are very much sure that it is not a level 4. Even if it is a level 4, the standards are applicable. For level 4, there is no exemption from AS. For level 4 also, there AS are applicable. For you, maybe at least in level 3 or level 2 or level 1, based on the turnover and borrowing criteria which we discussed earlier. Let us now look at the next point is on the list of accounting standards which are applicable. Now, first and very important thing which I would like to mention here is that level 1 has to comply with the full all accounting standards. Now, so that means if it is a non-competitive which is falling in level 1, then all AS are applicable. Now we are focusing on the level 2, 3, and 4, because level 1 there is nothing to discuss because you have to come with all AS even if you are non-company. Now, if it is a level 2, level 3, level 4, AS1, AS2, AS4, AS5, AS7, AS9. So if you look at the first point, except AS3 cash flow statements, here all these A's are applicable to all entities. Now when we look at the next slide, which is focusing on basically the AS10 to AS20, here you find that there are for level 3, level 2, majority of the A's are applicable. However, in certain case, that AS10 and 11, there is a DE. Whereas I am saying DE is a disclosure exemptions. So accounting standard measurement is applicable here, recognition is applicable here, but disclosure which are required to be disclosed in notes on accounts. See, that means what? Even if though you have audited under tax audit, and when you attach the notes on accounts AS1 disclosure of accounting policy, you would ensure that it includes material accounting policy which is required. So along with that, basically here it says that for level AS10, 11, where I'm mentioning DE, means you want to comply with the recognition measurement, but there is some exemption relaxation as far as the disclosure is concerned. As far as AS3 is concerned, this is on disclosure exemptions. We'll focus on this asterisk mark later on. I'm just keeping this, reminding you, all of you, that asterisk mark will keep later on. Then there are employee benefit. I think one of the most difficult is on employee benefit standards, AS15. There are certain exemption relaxations which we'll discuss AS15 separately, because I know that this AS15 is critical, and for all of us, there are many things where this don't comply with it. So we'll focus on AS15 separately. 70 segment reporting, not applicable. A certain related party transactions, then if it is level 3, level 4, this is not applicable. For leases, there are disclosure exemptions, but accounting measurement has to be as per that AS19. EPS, again, this is not applicable. So I think here, when you look at, you will understand that this is the way this is covered. Then comes AS21 to 29. As I discussed that, this where we are focusing on this asterisk mark. So now I can discuss you what do you mean by asterisk mark. The asterisk marks are related to standards where the ICS says that generally they are not applicable, like interim financial reporting, consolidated, associate, joint ventures, amalgamations. So the institute says that these standards are generally not available. That's why there is no need to refer to as an applicable standard. Because then only thing it will just remind in your mind if there are no more many standards are applicable. So it says that it is not applicable. But in case if you are anything where you have some entities which is qualifying to be part of this particular thing, then yes, you'd be applicable. So in practical sense, I will say this is applicable if you have this kind of situation covered under the standards. Technically, it is not applicable, saying that because in general this kind of standards are not relevant, so it is not applicable. But I think practically, if you have some transactions, yes, it is applicable. Then comes level 4. There are certain exemptions for level 4. It is for AS22. I think again deferred tax is something which is critical. Please be aware that deferred tax is required to be created even till it is a level 3, and for level 4 only there are some relaxations available. But you need to comply with the deferred tax even for level 2, level 3, and level 1, even though they are not a company, right? And then comes the impairment of assets, which focuses on disclosure exemptions, and level 4, this is not applicable. I think this will provide you an overall chart, overall summary of what we are focusing on. Now, just to get the number of accounts applicable for the benefit of all of us, that fully applicable 27 standards, all are available for level 1. Level 2, 16. Level 3, 12. Level 4, 8. Not applicable. 7, 9, 11. Then there are some exemptions, relaxations for 15, 20, two standards, and disclosure exemptions. So this is what is our picture. I think we need to focus about these numbers, and then we have idea. But the one thing is that when I asked a question to one of the CA, he replied me that if you're doing tax audit, there are only 3 standards available: AS 1, 2, and 7. I don't know why. So, however, we have to be very sure that it is applicable to all all entities. So level 4 means everybody. Less than 10 crore is also level 4, to whom 8 standards are fully applicable. And if you're level 3, tax audit is more than 10 crore, then 12 standards are fully applicable, and there are certain exemptions and relaxations as far as this is concerned. So now let us look at the which are the standards which are applicable to all 4 categories. There are 8 AS which are applicable to all categories irrespective of the level. AS1, disclosure of accounting policy. My humble request to each one of you, please ensure that your notes on accounts in the tax audit report, balance sheet in account, when you attach a notes on accounts, it should definitely have a significant accounting policy disclosures, because that is the heart. When the accounts are prepared based on what accounting policy, how can one understand which accounting policy is followed? So the significant accounting policies, it has to be disclosed. And then comes valuation of inventory, contingencies and events occurring after reporting period, net profit or loss, prior period items, construction contracts, revenue recognition, government grant, borrowing cost. So this is what is applicable to all 4 categories irrespective of the level. Now, basically, list of account standards entirely not applicable to level 2, 3, and 4 categories of non-company entities. That is what is AS3 17. So cash flow segment only when it is mandated. AS3 cash flow, segment reporting, EPS, consolidated associate, interim reporting, joint ventures. So these 4 which are focusing on the consolidated associate, interim reporting, joint ventures is fine. We should focus asterisk. And then there are 3 which is cash flow, segment, EPS. So there are 7 standards which are entirely not applicable to level 2, 3, and 4. Now with this, we just move to AS15. Before AS15, let me just look at the chat box to see, do you have any questions? I think, yeah, Jayesh B asked questions. What about when trust audit is done from Form 10B? Account standards are not applicable, sir. As I mentioned, if it is done, if it is a charitable institutions and there is no commercial entities, if there is commercial entities there, even if the small, yes, AS are applicable. If there is not a single commercial entities, in that case, basically, the accounting standards are not mandated to be applied. You have to comply with the requirements of the charitable trust or regulation under which you are required to be audited. Mamta has asked if any entities are violating, any of the accounting standards, in which report we as an auditor have to report. Since to non-entities we are issuing only Form 3CB. I think that is very, very important questions by Mamta. Mamta, I will just request to keep it on hold. I have separate specific questions covered this separately, and then we'll deal at that time. But yes, this is something which is very important for all of us to understand what to do in case of non-compliance. I have FAQ specifically addressing these questions. Then Bhavik Bhai, yes, Bhavik Bhai, you are very active. Yes, is revised Schedule 6 format mandatory for non-corporate entities while preparing their financial statements, or they can prepare in T format and give previous year figures? Bhavik Bhai, I think, see, Schedule 3 format, Schedule 6, okay, Schedule 6 is old one. Schedule 3, Schedule 6, they all are basically old one. Obviously, but they are the part of Companies Act 2013. So as far as the format of non-corporate, non-company entity is concerned for financial statements, there is no format which is specified by any law or regulations. If any law or regulations specify the format, you have to follow that format. With this object in mind, in WRC, we have taken the initiative to provide the model format of model format of financial statements for non-company entities, because we are aware that everybody issues that what to do in case of non-company entities. What is the format? So WRC has issued a publication last year where the model format of financial statements is being applicable. I will also share with all of you. I will share with the convener, and the convener will be able to share with all of you. Plus, that particular publication is under revision. And as Manish Bhai has briefed in his opening remark, that we are right now revising to update as per the announcement issued by ICAI recently, and also adding the model audited format. Also added a frequently asked questions and the list of the applicable account standards, disclosure and exemption realizations. They all we are trying to cover in one publication, which may be helpful to each one of you while understanding and dealing with the non-company entities. So, Bhavin Bhai, there is no format which is specified, so we need to go by the something which we feel is correct. So we have come out with publication. If you feel you can go ahead with this publication, you can modify, you can change as per your requirement. I hope that's clear to all of you. Now moving further, next point is on the focusing on AS15 employee benefits. Under AS15 employee benefits, basically the exemptions or restrictions is covered based on number of employees. It is not focusing on turnover. It is not talking about the borrowing part. What it says only one thing is that applicability of AS15 exemptions or restrictions are based on how many average number of employees are employed during the year. If you have 50 or more employees, then it says that, let us look at this situation. Here it says that if you have 50 or more employees, so basically you are a little large. I think the focus is that if it's 50 or more employees, you are a little large firm. Then in that case, it says that for level 1, you have to comply with everything. There is no exemption for level 1. For level 2 and 3, short-term compensated absences, that is what leave encashment. With a leave encashment which is accumulating and which is short-term and which is non-vesting, means what? The leave policy of the company is such that you can carry forward leave to the next year only till the next 12 months. So it is accumulating. Short term, because you can also utilize next within 12 months. And second thing is that if it is non-vesting, non-vesting is what? Where it cannot be encashed. Means the next year, if the employee leaves the organization, in that case, he is not eligible to pay the balance which is outstanding that. So it is called non-vesting. So if the leave encashment is a non-vesting accumulated short term, then it says that there is no need to comply with this particular requirements for AS15, which is there under AS15. If it is a defined contribution plan or a termination benefit, so I think we all are aware that there are 4 categories of employee benefits. First category, which is called short-term employee benefits. Second is post-employment benefit. Third is a termination benefit. Fourth is other long-term employee benefits. Short-term employee benefits, if it is short-term employee benefits with a leave encashment, non-vesting, accumulating, then there is no need to comply with the AS15 requirement for that particular part. If it is a post-employment benefit where the plan is a defined contribution plan, means you are required to make payment, which is contribution, that is your obligation is only limited to the amount you have to contribute. Or termination benefit where the amount is to be paid after more than 12 months. If that is situation, in that case, basically standard says that you do present value, you do discounting if the amount is to be paid after more than 12 months. So that is a relaxation provided for level 2 and 3, where there is no need to do discounting even in that situation. Then comes a post-employment defined benefit plan. So in post-employment benefit, there are 2 parts. One is defined contribution, second is defined benefit. For defined contribution, we discuss the things where if there is an amount to be paid for more than 12 months, then no discounting. If it is level 2 and 3. If the defined benefit plans, for defined benefit plans, basically it says that you have to apply the PUC method, that is a projected unit credit method. Now under AS 15, there is a lot of requirement where you have to apply PUC method, plus you have to provide actual loss, curtailment, settlement, all these requirements. However, here it says that if you do measurement by just applying PUC method, you are not required to look at any other things. So for post-employment benefit, defined benefit plans, and other long-term employee benefits, for both the case, you can just apply PUC method for measurement, and then that's it. That is what the relaxation provided for level 2 and level 3. If the level 4 entities, where irrespective of the number of employees, the level 4 has relaxations. So we'll focus on these relaxations. So level 4 and level 1, level 2 and 3 having a less than 50 employees, they all have relaxation as mentioned here. First two are same, where they're focusing that short-term accumulated compensation efficiency exempted, payment more than 12 months, no discounting. And for point number 3 and 4, where defined benefit plan is there and other long-term benefits, you can just apply other rational method. I think this is one of the most important exemption for us. Instead of going to actuarial valuations of PUC method, if you are level 2, 3 and 4 with less than 50 employees, in that case you can just go by reasonable estimation. But what does it mean? It means that there is no exemption or relaxations to you as far as making provision for gratuity, provision for leave encashments. The only thing is that there are certain relaxations, certain exemptions based on the number of employees. But even if your employees are less than 50, just 10 employees, just 8 employees, 30 employees, still you need to provide for the gratuity, you need to provide for other pension benefits or other long-term benefits by following rational method, means assumptions based on an Excel file calculations. That is sufficient, but there is no exemptions from measurement and from providing in the books of accounts. So I think that is what I would like to make it very clear to all of you, that let's please ensure that in whatever non-competitors you are signing and assisting financial statements, you have to ensure that this is complying with these requirements. Now let us move to the next very important point, is on the AS22. The AS22 for a current tax. I think as we discussed earlier that for AS22, if it is a level 2 or level 3 entities, if it is level 2 or level 3 entities, in that case AS22 is applicable entirely. So deferred tax, current tax, there is no exemptions. You need to comply with AS22. So level 3 is what? Again, I'm reminding again, more than 10 crore. So if you're doing tax audits of entities which are not a company for more than 10 crore, then level 2 and level 3, they both are applicable, a whole AS22. If you are a level 4 entities, then in that case, the direction is that you can just apply the current tax. And if you are moving from a transition from level 3 to level 4, then there are certain restrictions here for the first time, where any amount which is outstanding in deferred tax asset liability on the beginning, when you move from level 3 to level 4, you can adjust with the opening retained earning. That is the transitional account for this. But however, the most important thing here is that for level 2 and level 3, there is no restrictions as far as AS22 is concerned, and for AS level 4, there is a restriction that you can only apply current tax. Now let us look at the next point. It is on impairment of assets, AS28. When I talk about AS28 impairment of assets, I think we focus on that there are certain disclosure exemptions for this, and for level 4 it is not applicable. So for level 2 and level 3, when you apply AS28, first realization is also little measurement, I will say, because here it says the value in use instead of doing a present value, you can just go by reasonable estimate. Because under AS 28, it says that value in use is nothing but the present value of the estimated future cash flows. So instead of going by present value, here you can just go on basically focus on the reasonable estimate things while computing the value in use by present value. If entity opts to measure value in use by not using a present value technique, then you have to provide a relevant process which are not applicable. So I think that is what is for AS 28 impairment of assets. Fine. So there are few disclosure requirements are there here, but however, basically that you can deal with because there are a lot of list of disclosure requirements. So there is a publication which we are focusing, which right now we are training, where the list of disclosure are provided, which are exemptions there. You can refer to that, and that will be a sufficient for all of you. Now let us look at the few questions. Disclosures in financial statement if avail exemptions or restriction. Before that, let me just refer to the chat box. For any questions if you're having. Okay. Oh, I do have questions. Very good. Fine. Bhavinji, we discussed. Okay. Chetan Bhai, you asked questions. In financial year 1920, and it was covered, say, level 1. But 2021, it is covered in level 2. Okay. Chetan Bhai, I will take your questions separately because here, this particular slide is for your questions, but we will check that you mentioned a cash flow statement, sir. So we'll focus on that also. The level 1 to level 2 when you move, or level 2 to level 3 when you move, then what is to be done relaxations? So there is a downward and there is upward. So there is a separate slide which I covered to cover your questions. We'll discuss that, and then if you have questions, we'll definitely talk on that questions. PBSE Balasubramanian, I think you have been Balasubramanian, right? Okay, so what is the disclosure requirements if the employment contract clearly states that employee is eligible to any terminal or other employee benefits, no contractual obligation? So disclosure requirement, I think we need to look at the disclosure. There are a lot of disclosure requirements there. So basically, if it is applicable, for example, so what you're saying, if it is employee is eligible to only terminal or other employee benefits, no contractual obligation. So are you focusing on disclosure or are you talking about the measurement? Disclosure will come only when you first determine. I think if you look at AS 15, sir, under AS 15, any employee benefits is required to be classified into 4 parts. Is it short term? Is it a post employment? Is it a termination or other long term? So under which particular category it falls? If it is a terminal benefit, right? Termination benefit, not terminal. If it's termination benefit, then whenever the termination benefit is there, there's a definition of the termination benefit. It's a contractual obligation of employee of a company. Then you need to basically comply with the disclosure requirements. So the disclosure requirement will come only when you are required to comply with this particular category as per the definition provided under AS 15. I'm not leaving that because I know that there are there are 3 other sessions practically on these standards where it is going to be discussed in detail. Ghanshyamji, please share a sheet as to the applicability of AS to NCA at each level for the sir. I will share my presentation to all of you. It is my privilege to provide you my presentation. The reason is that I want each one of you to comply with these requirements. Second thing is that publication, as I mentioned, is ready, and maybe tomorrow or maybe within a couple of days it is going to be issued, which include all the listing, everything. I mean, not eligible. I think you are saying employee is not eligible. So if an employee is not eligible, then there is no need to worry. If the employee is not eligible for the benefits of terminal, I think what is terminal benefits? You're saying gratuity benefit. So gratuity benefit, if you're saying any benefit which is covered by a statute, if your question is on that, I'm not very much sure, but if your question is that if any benefit is covered by statute, but you said that employee agrees that they don't want to claim, but still it is covered by statute, so it is required. There's need to create a provision because you are under statute obligation to make payment, so that will override all your personal contracts. I hope Balasubramanian, my question is clear to all of you. Plus, still, if you have questions, you can raise again question to the faculties, which is going to be there for AS 15. Now coming to the next point is on disclosure in financial statements if avail exemption or restrictions. I think the first very important thing is that we need to disclose in our notes on accounts the fact of being MSME. How can one know that whether I am MSME? How can I know that under which level these entities falling? So the first thing, when you start with accounting policy, first paragraph, you can mention that you are a micro entities and covered under level 1, or you're a small entities which is covered under level 2. So that fact you can mention in your notes on accounts. Second thing is that you can also mention the compliance with account standards as applicable. So as applicable, if you're level 2 entities, then as applicable to level 2 entities, you comply with the account standards. That should be mentioned, because that means it's very clear that you don't expect me to comply with all AS, only to which I am a level 2 entities, they are applicable, I'm going to comply with it. Next comes upgrade. I think I'm coming to the upgrade downgrade. I think Chetan Bhai asked question. Upgrade. In case the entities which are no longer eligible for exemptions, then what? So for example, if I'm upgrading myself from the level 3 to level 2, or from level 2 to level 1, so in that case it says that when the year in which I have to apply for level 1, then for that particular level, particular year, current year, I need to comply with all account standards of level 1. Previous year figure, if I have to provide, then for previous year disclosures, if I have to provide, in that case, there is no need to restate prior period figures. So prior period figures are not required to be restricted to comply with your level 1 requirements. However, current year you have to comply with the upgraded requirements of level 1. Now coming to downgrade, as Chetan Bhai has asked question that I have downgraded from level 1 to level 2. Under level 1, I was required to comply with AS3. Now I am not required to comply with AS3. So cash flow stability is not required. So here it says that if you don't qualify, if you are downgrading to another level, level 2, level 3, level 4, then for 2 consecutive years, you are not eligible for any exemptions or relaxations for 2 consecutive years. So for 2 consecutive years, you are not eligible for exemption and relaxations. But if you are there in downgraded activities for next 2 years also, then you can be out of the cash flow statements, and then you may not prepare. However, you have to watch yourself for next 2 years to continue to be comply with the AS for next 2 years, and thereafter, if you still remain in the level 2, level 3, level 4 is downgrade status, then you can be out of this exemption relaxation requirements. Then comes the availment of exemptions or relaxations for selective accounting standards. So if you are availing only exemption for selective accounting standards, it is always better to provide disclosures, say for which accounting standards you are selecting exemption or relaxations. And certain case, if you are selecting exemption of particular exemption of only one AS, then your note should be very much clear that which exemptions or relaxations you are opting, which account standards you are opting. So that should be very clear in your notes on accounts. I think that is what I'm just trying to provide the input to all of you, that it is not only the compliance of AS, but along with compliance of AS, the disclosure of the compliance, which level you pertains, what AS you are compliant with it. I think that information should also be part of your notes on accounts. Now coming to the question, I think which Kajal has asked question, that is the duty of auditor. What is the duty of auditor in case the accounting standards are not compliant with it? I think that was a question which was asked. Somebody is asking me question earlier. Mamta, yeah, Mamta is asked question. So Mamta Shet, the deputy convener, has asked question that what is the duty of an auditor in case the accounting standards are not compliant with it? I want response from all of you. Can anybody respond? What is the duty of auditor? What is to be done in case it is not compliant with it and you are a tax auditor? What is to be done? Anybody please respond. Mamta's question is very critical, very important for all of us, that what is the duty of auditor in case the accounting standards are not compliant with and particularly when you are also in a tax audit report, then what is to be done? Mamta, it seems that you are asked a very, very tough question and I'm not getting response. Waiting for response, sir. Please, you all are having so much kind enough to be interactive and everybody is so much responsive to the questions. So that's why my expression is a little high. Oh, fine, not an issue. I understand that you all have been tired of, but yes, the auditor's duty is such that okay, there is somebody who has given reply. Oh, I have received. There are there are a lot of questions. I've not seen that questions. Okay, fine. Sorry, I have not seen the chat box correctly. I have already received the response. Wow, sorry. Oh my God, I have been receiving a lot of fine. Okay, yeah. PBS, Balaji, qualify, quantify, disclose. Fantastic. BPMG, qualify, report in audit report, qualify, disclosures, qualify report, qualifications, suitable disclosure, need to be mandatory report, disclosure report, disclosure, qualify, repeat, qualify. Okay, very good. Report in 3CA or 3CB, qualify the report. Fantastic. I think everybody is so much cautious. Everybody here, I can see that wonderful response to each one of you. First, thank you each one of you for giving so much responsive. Yes, the question is that if the accounting standards are not compliant with it, as we do in company audit, that we need to qualify, same way we also have to qualify and put our comments in your audit report. So qualification or observations, it is based on the type of comments. I'm not saying the all non-compliance will lead to the qualifications. It is based on the non-compliance, the material in respect which affects true and fair, then it will amount to qualifications. The next question which she wanted to understand was basically that this qualification fair to mention for tax audit report. In a tax audit report under form 3CA, 3CB, there is a separate clause which talks about your observation comments. I think let me just cover that clause if I have some information. I think clause 3 or clause 5 of that particular thing, which is talking about the qualification part. Clause 3 and 5 of form 3CB and clause 3 of form 3CA, where you have to mention your qualification is if you are a tax audit report, right? And Shailesh Pandya ji asked funders applicable to gratuity trust investing funds on behalf of the company. Shailesh bhai, gratuity trust, I think gratuity trust are, can we say it is a commercial activities or it is charitable entities? I am not very much sure, Shailesh bhai. I think you have asked various very relevant questions. In my view, the gratuity trusts are not doing commercial activities. If it is such, then it is ESR not applicable. But yes, let me just go through it, and we'll be in touch, Shailesh bhai, for this particular query. Thank you so much. Fine. So I think I'm clear on this particular part that you need to qualify or quantify. What is the duty of an auditor in case financial statements are prepared on a basis other than accrual? I think again I want your response that what is the duty of auditor? Is it allowed to have a cash basis of accounting? And if somebody prepares a cash basis of accounting, what is the duty of auditor? If the financial statements are prepared based on cash basis of accounting of an audit in case of financial statements which are prepared on a basis other than the accrual. Disclosure policy, Yogiraj ji, yes, as per section 145, very good. Yogiraj ji mentioned that why? What is the situation there? If somebody is compliant with section 145, where the professionals, certain professionals are allowed to be carrying cash flow statement, allowed to be on cash flow accounting, then what is the issue there? Fine. So, okay, first thing is that if it is prepared for other than accrual, then as per the preface of accounting standards, all accounts has to be prepared on accrual basis. So there is an exception to that particular assumption of accounting standards. So we have to disclose clearly. if it is not basically being exception from, if it is not being allowed by section 145 and somebody is prepared a cash basis of accounting, then you have to qualify. Because something which is not allowed and it is being done, you have to qualify. If it is something which is being allowed by section 145, then it is always better to provide disclose in notes to accounts appropriately, so that everybody is clear that why it is prepared on cash basis of accounting. So professionals are allowed, other than those entities have to follow accrual as it's required. Mahendra Bhai, you are perfectly right on these things. In case of companies where qualification related to AS is given in the audit report, same needs to be incorporated in tax audit report as well. Yes, Pritesh Bhai, absolutely. The way we provide a qualification in our audit report, same way in tax audit report. Just look at tax audit report clause 3 and clause 5 of form 3CB and clause 3 of form 3CA, which says that provide your observation, qualifications, remarks. So that is the main objective of the particular things where you have to provide your qualifications in when you provide a certification, when you do prior informations. Okay, with this, let us move to our next agenda, that is on whether UDI is required. Question to all of you: whether UDI is required for non-corporate entities which are not subject audit. Obviously, if you're doing any signature, any attestations, even for the bank purpose, for example, there is no statutory requirement to do audit. However, you do audit for the purpose of the bank. Bank requires to do audit, but whenever you do any attestations, please ensure that UDI is there. Now, before I move to the next part, I'm just referring to the publication which we are going to issue very soon, which is focusing on accounting standards applicability for non-corporate entities, which will cover accounting standards applicability, exemption relaxation list, frequently asked questions, model auditors report, model financial statements, which includes balance sheet, profit and loss account, cash flow statement, notes on accounts, and then there's appendix of ICI. That is what has been currently we are working on, and it's ready, and we are going to issue very soon. And then there is a list of resources which are available. There is ICI announcement which we refer to, that account standards quick referencer just issued by the ICI last week, which is on a quick referencer for AS for micro non-corporate entities. Then there's model financial statements of non-corporate entities, which is issued last year by WRC. Accounting standards quick referencers and the company of accounting standards. So with this, I end on my first part of the accounting standards applicability. That is one of the most important thing. Now, second part which I'm going to cover, that is on the commonly found errors. Commonly found errors are there is a compendium, there is a publication which is issued by ICI with a list of the errors which are there for each AS wise. So my focus is not to cover everything. My focus is just highlight few issues in various account standards where I can just focus on where to learn from the others. So let me just give you a second to learn to start another specialization of commonly found errors for the non-corporate entities. So now I'm going to focus on one very, very important thing, and I think this presentation is visible to all of you. And please read to the statement by Warren Buffett. He mentions that it's a good to learn. It's a good to learn from your mistakes. It is better to learn from other people's mistakes. I think that is what we need to really aim for. It's good to learn from your mistakes. It is better to learn from other people's mistakes. I think we all should try to learn not from our mistakes. Obviously, we should learn from our mistakes, but we should do something where we should not redo any mistakes. That's why there is a publication available, commonly found errors, and we should go through this commonly found errors, and then from going to errors, we should understand that this is we should not do this kind of mistakes. I think there is one, sir, my mobile number 11 digit. I don't know why there may be some issues. Let me just type here 90. Okay, fine. Okay, so basically the publication itself basically focusing on the AS1 to AS29, and AS wise they have provided the deficiencies which are observed here. Let us look at now first. Okay, this publication has many issues which are not in totality. The publication has number of issues. I will just cover few years, and as the time permits, we will cover. There is no need to cover all account standards, all issues, but the focus is to cover the few issues so that you are able to correlate yourself. You are able to understand the reading habit of going through publication is to be cultivated. Let us look at the AS1. Under AS1, in various companies, it was observed that the following accounting policies were not disclosed. I think please everybody make sure that under AS1, disclosure of accounting policies, under AS1, it is mentioned specifically that all significant accounting policies must be disclosed. See, that is the only way where the users or readers can understand how the accounts are prepared. So you have to ensure the borrowing costs, valuation of inventories, accounting for investments, employee benefits, taxes on income, interpretive assets, provisions, contingent liability, contingent assets. There are a few things which we have to observe it was not there. So please make it comprehensive and disclose in notes and accounts. Then there are a few. I am just putting these points, and I want all of you to give a response. That there is a first case. Stocks of cards. This is the accounting policy disclosed in a company's account standards. I am not focusing on non-company. I'm saying company. Said stock of cards are valued at cost and on FIFO basis, and include all applicable overheads. In bringing the inventories to the present location conditions, work in progress is valued at cost. What is wrong here? What do you feel is not correct? What is missing here as far as this accounting policy is concerned? Please give a response here. What you feel is basically not available here. Sudhir Shinoyji is mentioned that should be cost or market value which is lower. Fine. Anybody else? Anybody else? What is wrong here? Please. I think there is no mistake here. I think everybody, please, cost or Manish Prasad ji, cost or NRV which is lower. I think that is fantastic. Sudhir Shinoji, yes, just to be little bit ahead than what you're saying, the cost or net realizable value, I think this is critical. There's a difference between market value and net realizable value. So we will be very, very sure that we will use the word cost or net realizable value, whichever is lower. Fine. Anything else? Anything else you identified the mistake here? Okay, great, sir. Sir, fantastic. Any other mistakes, or you feel this is only one mistake of cost or NR which is lower? Okay, let me just say here things that basically. Okay, so fine. So here it says that the stock of cards are valued at cost and on FIFO basis. So it includes the cost measurement techniques. It talks about what is to be included here, but however it doesn't mention about the finished goods. So you have to see that it should mention about the raw material, work in progress, finished goods. Everything should be there, and for that how the cost is measured and the measurement of cost or analysis is lower. So it has to be captured for all types of inventories, work in progress, raw material, finished goods, the techniques of measurement of cost, and also the measurement techniques. Coming to the, I think the same, I'm not focusing on all the things. Let me say cash flow statement we'll take later on. Okay, fine. Now this point, just what is wrong here, in one of the enterprise, the components of cash and cash equivalents as reported in the balance sheet includes cash in hand, cash at bank, earmark balance against LC, gratuity and superannuation, etc., unpaid dividend account, interest accrued on fixed deposit, and the total of these components matches with the closing cash and cash equivalents as reported in the cash flow statements. So what is wrong here? Is there anything wrong here? सर कोई रॉन्ग यहाँ पे है कि नहीं है? Okay, Sudhir Shinoji, interest accrual on FD should not be included. Fantastic, sir. Good. Pritesh, earmark should not be part of cash account. Very good, sir. Bala Subramanian ji, interest accrued would be classified as current. Very good, sir. Anything else? So I already respond that earmark balance against LC, graduate superannuation fund, and interest accrual fixed deposit, they both should not be part of my cash and cash equivalent. Same way, unpaid dividend account should not be part of my cash and cash equivalent. So that is what we will be very cautious when we tag and label something as cash to cash equivalent. There's a definition provided in AS3. We need to look at the definitions, and as per the definition of cash and cash equivalent, we need to provide a presentation and disclosures. So let us look at the prior period items. What is wrong here? Prior period expenses and income are included in the respective heads of expenses and income in the profit and loss account. What is wrong here? Is it correct? Should be shown separately. Absolutely. So what it mentioned that if I have, for example, there is a prior period item which is on advertising expenditures. So instead of including that prior period item separately, what is done that item is shown as a part of advertising expenditures. And in the notes on accounts, it was disclosed that in respective head, I've done that. That is not allowed. Prior period item IS 5 made it very clear that you have to disclose it separately. So that's what. Thank you so much, Mamta, Mehul, Sudhir Shinoy, and Shiva Bhai. All thank you so much for that. And now let us look at the next. Okay, point is on basically. Fine, this is not so much relevant. I'm just skipping that thing. Okay. So basically here AS7 constitution code, I think the focus is that even though the company has construction contract which can be reflected from the revenue recognition policy of the company, still the disclosure requirement of AS7 are not there, where it mentioned that you have to provide disclosure for aggregate amount of cost incurred and recognized profit, aggregate amount of advances received, amount of retentions. This all is to be disclosed. However, there is no such disclosures under AS7. Therefore, was something which is being non-compliance. And let us look at the AS9. Just go through this particular accounting policy and let me know what you feel is not correctly captured here. The accounting policy of revenue recognition, as given in the annual report of a company, inter alia states that revenue from online educational services is recognized upon receipt of subscription fee in case of non-refundable otherwise apportioned over the subscription period. In the annual report of another company, the following accounting policy has been disclosed. Revenue from online education services is recognized upon receipt of subscription fees. What is incorrect here? What should be the correct accounting here? Correct disclosure here? Okay, show separately, fine. Mamta, accrual method should be followed. Fantastic, Mamta. I think that's a correct word, accrual method, fine. But okay, anything else? So what is the AS9 talks about? AS9 says that you have to recognize as and when the services are rendered. So incorrect, as Mehul bhai, you are correctly said, incorrect is that revenue is recognized on receipt basis, which is incorrect. So it says that yes, Shiv Shanappa should show separately. No, but always showing separately. What is critical is that recognition of revenue, sir, is not correct. The revenue recognition should be on accrual basis. So in case of services, as and when the services are provided, it should be accrued. Even if it is a non-refundable subscription fees, there is no exception for that. All revenue should be recognized on basically on accrual basis as and when the services are rendered. Yes, Vinod Bhai, continuous service, so it is to be accrued over the period when the service is rendered. Okay. So dividend income, I think we all are aware that dividend income is recognized to be income when there's a right to receive. So it is not when it is as in received. There's a mention that dividends is recognized when it is received. So it is not correct. Dividend should be recognized when there's a right to receive payment is established. At that time, you have to recognize a dividend as income. Then here it mentioned that the revenue is recognized when no significant uncertainty as to the miserability of collective exist. I think there are a lot of things out there. We when we look at the significant risk and reward, we look at the timing of revenue, that also should be disclosed here. Now this is a very important point as I'm discussing. From annual report of a company, it has been noted that a significant amount has been shown as site and land development during the year. However, no depreciation has been charged in respect thereof. So what is incorrect here? Yeah, Pradesh, you mentioned amortization means basically you feel that amortization should be done on site and land development cost. Then for how many years? Anybody else? What do you find is wrong here? It should be quantified. But sir, how can you quantify site and land development if the no depreciation is charged? Okay, you're saying you will quantify as there's a negative comment is there, you will quantify how much is not charged. Okay, so fine. Okay, so first thing which we have to understand that the assets, property, plant, equipment shall be classified class wise. So when you look at class wise classification, it means that there is a class of land, there is a building, there is a machinery, equipment. So these are a class of assets in my plant machinery, in my PPE schedule. So site and land development is not a separate class. It actually includes two components. One is which is with respect to the land, and there can be some expenditure which is with respect to building. So you need to first classify these into two parts, land and the building. And if the component is with respect to land, in that case there is no need to do depreciation or amortization. And the component which is with respect to the building, it is to be amortized or depreciated over the period. So I think what is required that you have to classify appropriately in PPE, and then based on classifications, the depreciation or amortization will cover the picture. Coming to the next part is on basically, oh, this is one very important part. Let us give us a reply. So from the accounting policy given in the annual report of company, it was noted that the export sales have been recorded at the rate notified by the customs for invoice purposes. So I am reading it again. I want your response. It is one of the very, very important thing for all of us. It is mentioned that the export sales have been recorded at the rate notified by the customs for invoice purposes. Is this correct? Or if no, then what is to be correct? AS11, export sales have been recorded at the rate notified by the customs for invoice purposes. Is this correct? If it's not, then what is correct? What happens? I know it's, I think it's 7 o'clock, exact sharp 7. So you all are tired up. I will not stretch beyond a certain period, but still let us take this last one. Then at the time, then we can close it out. Manish G says export sales to be recognized based on rate prevailing on the date of export. Fantastic, sir. Fantastic. So yes, we need to ensure that it has to be at the transition date action rate. The custom rate is not correct. Custom rates are for the purpose of customs valuation and making custom duty payment. they are not changing every day. They notify the rate for 10 to 15 days and then they are notified. So custom rates are not corrected. AS11 says that basically you need to measure at the transaction date exchange rate. So that is the what is correctly to be done and nothing else. So I know that basically there is a limitation of time, not much time here. I can just say everybody that please ensure that all accounting standards are compliant with it. I know that there are many things to be done. The way the profession is changing, it is critical for all of us to be really here. But before the last slide, this is what I want to say, that learn, apply, achieve. So whatever we have done learning in these particular 2 hours of time, the most important thing for all of us and for me particularly is that if we apply even one small thing, then I think the time which is being spent by all of us is being really fulfilled. So my humble request to each one of you is that please go through, please look at our existing practice, the way we are doing it. Everybody should learn. I also have to learn. Everybody should ensure that there is a lot of scope of improvement. So if you are able to really go a step ahead, then I will believe the time is spent by all of us is being really fulfilled. So let me look at if you have any questions. Any further questions we can cover? Okay, no further questions. So before I end, I am thankful to each one of you by my bottom of heart that you all have been so much kind. You all have been really so much kind to interact with me during the sessions. Your valued suggestions, your valued questions has really made the session very interactive. For your sparing your valuable time, and I wish all of you all the best. That is what I want from each one of you. And with this, I hand over the charge to the organizers to take it ahead.
Thank you, Chintan bhai. It was really nice session. As you can see on chat box, people are mentioning that it was really nice session. We learned a lot from you all. For a present vote of thanks, I request Jayesh Bagadia to please give a vote of thanks. But before that, some announcement. Members will be having this session on next Saturday on accounting standard, which is held by Harsh Devi. We have already circulated. Hello. We already circulated about the information about all the AS to be taken. This is so this is the first session. We will be handling such 4 sessions. Chandana, once again, thanks a lot. It was really a good learning session for you. Now I request Jayesh, please give.
Yeah, good evening. It is my pleasure that the Ghatkopar Study Circle has requested me to present the hardly deserved vote of thanks. Sri Chartered Accountant CPA Chintan Patel has presented, enlightened us very much dark for many of us. We were not looking properly as what was required when we are signing non-corporate documents, financial statements and all that. It is really enlightening us, and I am also thankful on behalf of, though it is not possible to present loud applaud, but on behalf of all the participants, 200 plus participants, I am presenting a very hearty vote of thanks to the today's speaker, a very learned speaker who has presented very lucid manner and so much detail. And he has also answered online queries, online questions also. And we are also thankful to you, sir. And we look forward to you learn a lot of things from you. And also, sir, we will try to remember not just learning in 2 hours, but all our participants will definitely apply in their day-to-day practice. And that will be real thanks to you. I am also thankful to various participants who made the event very lively, whether it is Mehul, Balasubramaniam, Mamta, Jayesh Bhai, Sailesh, Kansianji and all. Thank you everyone. Thank you very much, sir.
Thank you so much.
Thank you.
All of you.
Thank you all. Thank you. Yes, sir. Thank you.
Thank you, sir.
Session. Thank you. Thank you. Thanks.
Thank you.